Shut up and sit down.
All right, everybody. Welcome to Rebel Trading Podcast, episode 36. It is Friday. Triple Sods. August 24th, 2018 is the date. What is up, everybody? My name is Nathan Oliphant. Welcome, everybody, on Twitch. Join us live now. We usually go live around there. We need to get better at announcing our times. Everybody, welcome with me, as always, the gluten-free Jason Bessing.
The gluten-free
Give it up.
Jason Bessing. How you doing, bud?
Good, man. Good, tired.
Happy Friday.
Yeah, it is Friday, isn't it?
It's Friday, baby. Does that mean anything to you, though?
It's the end of the week. So the bell closes, the week closes, the market closes. Do you think the market should be closed on the weekends?
I think it's healthy, to be honest, man. I think it's healthy.
Why?
We don't need it, but it gives time for just normal interactions. If it was just 24 hours a day, 7 days a week, it would just be so constant and so flooded, and volume would stretch over weird times, and it would be a disaster to regulate. And on top of that, I feel like it would just it would interfere with business operations, because they would just be so worried about the stock price 24/7 that I think it's healthy, to be honest. But I like that some assets are 24 hours, and some assets need to be 24 hours. Global commodities, wheat, they need to be 24 hours because people consume that shit all the time. So it's more like your realtor closes. What if you could just buy a house at 3 a.m.? Is that the same thing? Buying assets?
Yeah, I guess so.
I don't know, man. But
24-hour realty market.
I think it's good. Anyway, we are doing this during the market hours. Believe it or not, we don't do that very often. But at the current time, we're sitting on a positive day. Dow up a nice 134 points, Nasdaq up 65, S&P up 17. We'll get you the closing numbers at the end here. Let's go on over and check the Bitcoin. Let's see where she's sitting at. Sorry, I should have been more prepared.
That's all right.
Shitbag.
God damn.
I think we're definitely having a nice up day. I'm looking at the chart. I can see the chart. I just can't see the price. There it is, 6,612, up about $200 from last time we did this podcast. Not bad. 1.8% on the day. The news did come out on cryptos. They declined Invesco's ETFs, but apparently that decision is under review within the SEC. So they said no, but they're reviewing the decisions. So I guess that's a good sign? I don't know. We're going to see how it plays out when we get the final answers. But long Bitcoin, man, I'm liking the 6,000 range. I bought a little bit more today. Just a tiny bit. Tiny bit. Anything going on in the market news there with the old Nathan Oliphant?
Oh shit, it's day 3 of fucking market news. You think anything else is going on?
Not really. To be honest, it's not.
Politics is a slow game, people. If we're going to have any kind of market movement, it's got to be somewhere. I doubt it's, like, we're still earning, like, as, like, a freaking economy. GDP's getting higher.
I did get an alert today that the Fed president, Powell, said that they see continuous rates as the economy continues to hum. That's from CNBC. They see a continual raise. But we know that. I feel like a lot of that is priced in already. That's what we saw in the corrections in February. And
the people over at KPP think they should leave the rates and test it out. Test the rates that they have.
It does take a while for it to cycle. Like, none of this is a flip of a switch. Even over a 3, maybe 6 month period, it hasn't had the full trickling effect. It takes a while.
Maybe they see. Do you think they see some sort of like they have to see some sort of, I don't know. That's the
well, the economy is getting stronger.
But like they have to see an acceleration they have to see an acceleration in inflation.
Maybe they're just getting on top of it before it all comes crumbling down.
It's just like a preparatory, like 2008, like, oh fuck, it's coming.
Yeah, maybe it's because they don't see it coming.
Like, remember last time when we had rates so low?
I don't know, man. I know that sell-off is going to come one day soon. That recession is going to hit us. And
One of these days, my put's gonna hit $1 million.
I don't know about all that. And I'm thinking it's going to be the credit crisis, man. A lot of Americans are very levered out. Kids are graduating with mortgages from college, getting jobs that don't pay them more than $13 an hour. I mean, it's rough out there. Very rough out there. So we'll see. We'll see. I hate to be a bear, the bear of bad news here. You like that?
I do. I love it.
Anywho, anything else kind of going on before we jump in today's topic there?
Let's talk about Trump for a little bit.
Let's talk Trump.
Okay.
TT.
Yeah, TTTs. So he's at a weird spot right now, especially like we don't like. I think I've heard like Democrats say that like now's not the time for impeachment. They want to wait till like all the trials are over. But if we talked about this yesterday, if he does get impeached, that's going to shake the market. What happens to all the tariffs?
I think that there's still technically executive orders. I mean, just
you can overturn them. I mean, can't you like strike them like null and void? Executive powers, man.
Yeah, the same authority that wrote them can also take them down. That's what he did with Obama stuff.
I wonder if we can get like a timeline of how long that trial is going to last.
An impeachment trial?
Yeah, and then strangle
What
that
would
day.
be the crime?
What would be the crime? Collusion! I don't know. No collusion. There's no collusion yet. I don't know, man. I feel there would have to be something. So campaign finance was fucking what's his nuts. I mean, isn't telling someone to commit a crime a crime in and of itself?
I guess.
Yeah. Didn't you say to me Trump told someone to commit a felony?
Yeah, I told his I forgot who it was. There's a lot of people involved in this shit, dude.
Yeah.
It was somebody, he told him to donate more than was allowed for his stature, I guess, in his power. I guess when you hit a certain point, when you cross that threshold in the government, there's certain things you can do, and they cut off some things that can be questioned as ethical.
Oh, there's campaign
that makes
finance laws of how much you can donate. They have like, I think it's like up to like $5,000 per person, and then like
Is that anybody?
Yeah, then it's like corporations and like super PACs can donate like more and shit like that, or I don't even know if that's how it works, but.
I mean, like, can you and I just give our entire paycheck no problem? Because that's different. But like, once you start getting into the tens of thousands, maybe even to the hundreds of thousands, and you're already a governor, like it can seem like you're trying to buy your way up.
There's like really specific rules, and there's like really finicky on them.
And they need to be there. To be honest, I think that they should be there. I'm not. Anytime we can limit government.
Yeah, because what are you gonna get? Like monopolies, just fucking like taking part of their earnings. Like that's in their earnings report. Like lobbying.
I think that's what. I think that's what both political parties are. They're both monopolies. And very bipartisan monopolies.
Yeah. All right. So that's all the news I got. Thanks for joining us for these 3 days.
Okay, well, real quick, I always like to have something before we jump into either terminology or market, or today's topic. Today, I as we know, unfortunately, I won't be with us till next Friday. I'll be out of town. I know, I'm gonna be out of town. Oh well, I need a vacation. Who doesn't? I'm going to read. I'm going to read this thing from the Mises Institute that I found online. It's free to everybody. It was written in 1963 by a gentleman named Murray N. Rothbard of the Mises Institute. That's basically a college of economics, and it's derived on Austro-Hungarian economic policies. I know it sounds all boring and stuff, but the title is "What Has Government Done to Our Money?" And it shows precisely how banks create money out of thin air and how the central bank, backed by government power, allows them to get away with it. He shows how exchange rates and interest rates would work in a true free market. When it comes to describing the end of the gold standard, he is not content with describing the big trends. He names names and ferrets out all the interest groups involved. And this is written in 1963. And it's like I said, it's free to everybody. It's a 112-page PDF. I almost said ETF. Ugh, brainwashed. And I think it's just important because it gives you a better understanding on macroeconomics. And I think that's a very important thing to understand in the stock market, because we do look at businesses every day and stocks every day. But when you can get a bigger, broader picture of what's going on and you can trade entire sectors and asset classes according to that, then I think that gives you a true advantage. So I'm going to put the link in there. If you're interested, I'm into that kind of stuff, and it's free. So why the fuck not? Murray N. Rothbard, what has government done to our money? And they have raped it. That is a fact. But anyway, I don't know. I don't know how you feel. I don't know.
Check it out. Check it out.
Anyway,
Check it out.
Nathan, can you tell me today's market terminology? It's kind of a two-word package deal day kind of day. And we're going to stick with the technical analysis here because we're wrapping up options. Can you tell me a resistance and support band and how that acts on a chart, what it is, why it is, what is important? Support and resistance levels.
Okay. So, let me find. Oh, this is perfect. If you're tuning on Twitch, and if you watch the video later, I have a ticker symbol PFT. I don't even know who they are. Invesco, it's a fund. It's an ETF. Invesco DWA Technology Momentum ETF. That's what I got in.
That's a stay away ETF.
I clicked on. I'm on FinViz. I clicked on. You can screen your stocks by what technicals you want, and I did channeling up, and that usually shows good resistance and support bands, or lines, or buy points. A support band is basically like if you think about like what support is if someone think about buying stocks and quantities of stock. If you buy like a bunch of stock at like market price, the price of the stock is just going to sweep those buy prices up, and so the price is going to escalate its way up. And then we're logical humans, and we realize profits, and then someone might decide to sell, and so they'll sell. So now the support is where that first guy bought those so many shares. So it now has support where it fell back to. Previous price points that it like looks like it hasn't dropped below is its support. The resistance is the opposite. Previous points that it hasn't really like broken past.
Right, that's a way to kind of identify where, not really identify it with perfection, but a general area where you can expect a decrease in price and an increase in price based on recent history. It shows you where a stock generally will fall to before it puts in a floor, or it gives that line of support. And support and resistance are also usually in tandem with heavy volume or higher volume. And that's what kind of identifies those floors, because those price points become attractive to investors or institutions alike. And that's what kind of creates that demand, and that's what puts in those floors and pushes a rally forward. Before the people at the top say, we like this, this is a good point to sell because we are now more profitable than we were last week at those highs, so we're going to get out now. And once again, that will often be supported by higher levels of volume that push selling kind of back down, and it's like a ping pong match that goes back and forth among the two. I personally think it's one of the first things I look for when I pull up a chart. Where do we see some support? Where do we see some resistance? And when you are able to identify those, you can also kind of look for double, triple bottoms, double, triple tops, and you can kind of identify channels and ranges to trade in. And if you can find those on those triple leverages, then that's beautiful. Woo! Find those channels on stocks that move nicely and are supported by volume and trends, and it's not easy to find. And if you stare at a chart long enough, you will force yourself to find support and resistance levels, and you might even make some up. You're like, oh, well, it's kind of like here, and it's hard to identify, but the key to look for is support on volume and resistance on volume.
So the ticker symbol that I looked up was PTF, and it's the Invesco DWA. I'm not sure what that is. Technology Momentum Portfolio, and it tracks an index of U.S. tech firms selected and weighted by price momentum. I'm sure you can look their holdings up online. But they have good support resistance bands over, like, check out that 1 year. Oh, even the 3 month. Bam.
And do you see support and resistance levels on multiple time frames?
Yeah. Oh
yeah.
Like, look at Bitcoin. Yeah. If you look at Bitcoin, it's got like a chunk of support, like at the 6300s. Like the
disgusting.
6,000 range.
We do have a lot of support in this 6,000 range.
It's like you can see the chunk of like volume that's just staying there. Like, no, people are hodling. They're just holding on to the price, and it's not moving.
That's what I'm saying. I'm not really seeing a lot of resistance at these levels, but we're definitely able to identify strong support at 6,300 and under. Definitely at 6,000. We can identify. I don't really see resistance as much as I just see a lack of willing to break forward. Does that make sense? I don't see like an area that is like, oh, 68, here we go. Because we've broken past those. And we've broken past 6,500 rallies and hit 7 and then come back down to 64. But it always comes back down to the normal spot. Yeah, does that kind of make sense? That's just how I'm feeling. That's kind of what I've been identifying in the past couple weeks, at least.
Price memory.
Yeah. If you're good, I don't say I'm good by any means. But if, like, we know Ford is one that I watch every single day. I know how it moves. I know when like 13-cent moves are bullshit and when 20-cent moves down are confirmed and it's time to buy some more. Like, it's just because I watch it multiple times a day. I'm tuning in. What is Ford doing? I'm watching. Where did it go? And I can identify these 5 to 8 cent ranges that I can try to capitalize on just here and there. Scalp a few pennies several hundred times. So, let's go back to the powerful tool thing. But yeah, you have anything else to add to that?
I think that's good. You did a good job. We did a good job.
Perfect. If you have any questions, comments, concerns, suggestions, insults, or corrections, please email us at rebeltradinggroup with 2 G's. That's rebeltradinggroup at gmail.com. We are also available on YouTube, Facebook, SoundCloud, and right here on the Twitch. How many watchers we got today?
I don't know. When I open up the stream, it kind of wastes bandwidth, so...
Yeah. Okay, no worries.
Closed. Oh, look, hold on.
I'm watching you, though. I'm watching.
Hi, everybody.
Anyway, so let's go ahead and move on over to today's topic. It's going to be a fun one. Today, we've been through call options, we've been through put options, and we've been through spreads. Let's just real quick kind of review what they are, just off the top of our head. So a call option is the easiest way to think of and the easiest way to get started is the call option. And the purchaser of a call option gives them the right, but not the obligation, to buy a certain stock at a predetermined price in the future. A put option gives the purchaser the right, but not the obligation, the right to sell a stock at a particular price in the future. And there is a buyer and seller behind each contract, and the seller of each of those contracts puts up collateral either in cash or in 100-share blocks in order to secure the integrity of the contract. A spread is any combination of calls and puts, usually on the same expiration date. And that's in order to capture just general movements, whether it's up or down, or within a certain range, or outside of two separate ranges. Whatever you want to do. There's really a lot of ways that you can set up these options. There's a lot of options on options, and that's why they're so beautiful, Nathan. They're just so versatile. So versatile.
Options on options.
Unlike a stock where you can buy and sell a stock. You can short and buy a stock. Options, we can be the casino and put everything in our favor. We can minimize risk, we can maximize profits, and it's a lot of fun. So because of that, as a result of that, I wanted to go over some of our personal favorite option strategies, or ways that we will analyze a stock before we say, I'm ready to look at the options on it. And how maybe you can take some of that information and some of our methods and tune them into the trader that you are. Or maybe even try them for yourself and see if you can get some profits. So, Nathan, take the floor. So, like, however you want to start.
Options?
Yeah, what's some of your favorite? So, what? Just between you and me, not like the general person, but more subjectively, just the two of us. Why are you looking at an option play in the first place, rather than just purchasing the stock or selling the stock? Why do you like options, and why do we like options?
It's addicting.
Why? What makes it addicting? Like,
it's fast.
It's a lot faster.
It's really fast.
It's faster.
It's fast in both ways.
It's very fast.
It's stressful because it's faster. But I like it. I like it because it's faster. And like when I'm playing options, I feel like I'm not as long as I would be with value stocks. Like you said the other day, I feel like or one time I feel like you said, or can I feel like a trader can day trade without even knowing the name of the stock. A lot of times it's like that, but most of the times it's on the SPY. That's what I do. Mostly every week I buy an option on the SPY.
Well, the S&P 500 is definitely not a bad stock to have in your catalog there that you always monitor, like how I am with Ford. You know the exact movements of the S&P, and you can recognize those chart patterns intraday or intra-week, then you're setting yourself up for success right off the bat. And we know purchasing a share of SPY requires a shitload of money. It's $250 just for one share. So what are you going to do? Buy 5 shares just to make maybe $3 on each one at the end of the week? No. I think one of the reasons that we like options so much, other than the fact that it's faster and gives you the chance to lock in profits quick, move on to the next best thing, is that it allows you to make money off of the movement of stocks without even having to purchase them. You can control hundreds of shares of stocks just by purchasing options contracts on them for fractions of the price. So what it would cost you to trade a single share of the S&P, you may be able to put down as a premium and get the price movement of 100 shares. And I think that's the beauty of it. It allows us with smaller accounts to really leverage ourselves. And at the same time, that's what makes it a very scary game. Because when you buy the S&P and it goes down $2, you're down $2. But when you get that call option for $200 and the S&P is now down $2, you just lost $200. But the same can be true on the other side, the flip side of that. If the S&P goes up $2 and you have a share of it, you made $2. But if you had an option on it and it goes up $2, you might have just doubled your money. Your $200 premium now just became a $400 premium. And I think that's the reason that we like it. That's one of the reasons it just moves fast. It's because every penny movement on an at-the-money stock or a near-the-money option, at or near-the-money option, every penny movement on the underlier is $1 on your premium.
Yeah.
And that's beautiful. So you can make money really fast. You can double your portfolio really quickly. You can also drain it really quickly. But once you get that education of what you're doing, you can put it in your favor. And you can protect yourself. So what are some of your favorite ways? Do you have like a mindset before you jump into a contract?
Sure. Where's the market at right now?
Is that something you're willing to kind of share? Or maybe just kind of go over?
I look at where the market is. It's kind of like a pretty like obvious. It's a backwards thinking really when I'm buying options, and I don't really day trade them because I don't have what's the limit, the legal limit, 25,000.
25,000.
I don't have that. I'm not trading with 25,000. So I set up when I'm trading for the day. What I call day trading, I call it week trading. Really, like if I'm setting it up for the next day or this week.
So you're swinging small price movements.
Yeah, this is if I'm like day trading being like really risky. But if I'm doing this is different if I'm doing like a long call. You know what I mean?
So so let's start there. So when you are looking at an option,
okay.
Do you do like the weekly? Do you do 3 months out? Like I've heard of some options traders that will not do under a year.
I've heard of some options traders that won't trade. Yeah, under a year. You're right. Yeah, like over a year, they trade a year out. I don't know. I can't sit
at the money a year out. Well, no, you trade at the money a year out. That way, when you even if you're predicting a 3% move, that 3%, that as long as it's at the money, it will reflect heavily within the current price movements.
Yeah.
But you're putting a lot of premium on it. But I guess that's the thing of safety. There's a lot of people who might buy it a year out because they can't manage their account every day or every week. They're also moving a lot more money at a time. So it's maybe in their best interest to get that. So do you have a minimum time frame? Will you buy end of the week on a Monday or end of the week on a Wednesday?
Dude, I bought a Wednesday call today.
So like a 5-day option?
Yeah, expires Wednesday.
Awesome.
Yeah.
So what's your favorite strategy? Do you prefer to go long? Do you prefer to go short? Do you prefer to spread?
I think the most exciting strategy is to trade the S&P, the SPY. Regardless of which way you think she's going, like if she's going up, you bet down, because that means the puts are going to be cheaper. You know what I'm saying?
Is that what you're saying? Is like the backwards mentality you have?
Yep, exactly.
So as it goes up, you'll get ready to get into short, and as it's going down, you'll get ready to go long.
Correct.
So you're just getting ready for the ship to shift gears, and you're putting yourself ahead of that. You're putting basically history in your favor. You're using history of what tells us, like, okay, well, this 3% drop can't really continue for 5 straight days,
Exactly, and I feel like a lot of times options is a probability game, especially like when you're building like a 7-day winning streak with the S&P 500 or the Dow Jones. Like it's gonna have a sell-off after like day 8, maybe.
It has to.
And if it's not on day 8, it's gonna be on day 9. And if you're not averaging in on day 8 and day 9, then I'm not sure what to tell you on day 10, and it's still not down. You better throw all the rest of your life savings at the fucking option.
So do you prefer to go directional rather than spread?
If I'm trading like a weekly and a shorter term option, I personally like to trade directional, like going one way.
like SPY's ticking up. Okay, we're getting puts.
Yep. Puts are getting
Not like
cheaper.
you won't straddle at the money. You're like, okay, I think
Nah.
we're at the top. I'm straddling.
Yeah, I don't know. I
Well,
find
just
the more and more I do that is the more and more like I feel like time decay takes in quicker, and so like both the options kind of like get screwed.
not only does time decay kick in, but you need more movement
Yeah,
because you need one to offset the other. So
exactly.
if your straddle, your call and your put at the money at the same expiration are both a $2 premium, well that means one has to double. Has to. So you need more movement. But if you just go directional, you don't need it to double. Shit, it can just move 10%.
Yeah.
It can just move 3%, 5%. You can just lock in your $200, get out at 225. Boom. Made $25. Try my next thing. Maybe you have 10 contracts. I don't know. Do you is there any point where you will give up? Maybe put in a stop loss or say like, I don't know, I'm just going to done, or do you usually ride them out to expiration?
See, it comes to a point like you just need a little bit of movement. Like if you keep averaging into the very, very bottom, this is the theory. If you keep averaging into the very, very bottom, you theoretically only need like a penny move. You know what I'm saying?
That's
You,
true.
you would basically, if when it goes down, the theory to actually work, the option would have to go down to a penny, and then you would buy however many dollars you're down, and that you just double down however many dollars,
Yeah.
and then
The
when it
averaging
goes,
down.
it can't go back. It can't go to 50 cents. So it's just gotta you just risk it just losing it all at that point.
Yeah, the
If it's
averaging
at
down.
$1, it's probably not happening. It might.
It's a lot more exaggerated when you average down, based when you average down on stock. Like if your $10 stock goes down to 960 and you average down, okay, you pulled your cost basis down a few pennies. But if your $200 premium now goes to $1.50 and you load up, well, you just pulled it down like 25%.
It's the same thing with like penny stocks too. Is you just keep like buying the dips until you get a profit.
Yeah,
And
because those moves become more exaggerated.
it's all a matter of like how much profit do you want. And with options, like shit, man, like $1 is 4% sometimes.
Mm-hmm. Yeah, dude, I think it's great if you get an option contract and it's a 5 cent premium and it goes to 7. I'll lock it in, dude. Because yeah, is that a $2 gain? Yes, but that's almost a 50%. That's like a 44% gain. And I probably didn't have one contract. I probably had close to 10 to 15 of them. So that little move, bam, makes a huge difference. But some people say they're 5 cent to 7. Oh, that's not enough. I need to ride it to 10, and then it never hits 10. So do you lock in your profits quickly?
Um, yeah, it depends. If it's shorter term, then yes. If it's longer term, I'll probably ride it out because I'll probably have more potential. What about you, Jason?
I was gonna say, when's it
How
my
do you
turn?
flex? How do you flex on options, dude?
Well, I use options for a few different strategies. Like yourself, I like to go directional, but I tend to do it on stocks rather than index funds, just because I know index funds move, but stocks can move more. I mean, at the end of the day, we might not have a SPY rally up 6%, but any other stock could 6, 8%. We see 12% rallies after earnings, and I like to do directionals on those ones that I've pretty much identified and have been range bound. Those are the ones I like to play the most. Some of them are gold, like JNUG. That's some of my favorite. That's one of my favorites to trade. I got fucked. I got really railed before this gold sell-off because I identified a range and I made money, and then got wrecked. And I lost most of what I had made originally from trading the same thing. So it just goes to show, like, you got to be careful. Even once you think you know it all, you still don't know it all. And the technicals were telling me it's in a range bound and it can't break down much further, and then just gold just sold off. And that was amongst all the turkey stuff, so gold continued to sell off. So I get really burned on directional trading, so I've veered away from it. So that is one of my favorite ways to go. I will still do it. I don't throw it away. I'll still do it. But another one I like to do some long-term options, mostly as insurance. So for right now, we know that I'm a conspiracy theorist, and I think that the next financial crisis will heavily be influenced by the student loan debts in our society. Kids are graduating with mortgages. I said it earlier. Mortgages in order to get jobs that don't pay them the proper money to pay it off. And I am a part of that. I mean, I do all right for myself. I still pay my bills and put money in savings every month. But most people out there, they don't have that ability because we got degrees that just suck ass. At least I did it knowingly. But I have a long-term short on a student loan bank called Navient, and it's a very far out of the money. It's a December of 2019. It's a 5-put. She's trading around $13 right now, and I just do it because if the student loan credit crisis happens, Navient is going to get demolished. And I don't like her financials. I've listened to some of her earnings calls, and I just don't like what I hear about the delinquency rates and stuff like that. So I decided to take a big bet for a 20-cent premium, so $20. It gave me exposure to in case there's a massive crisis in the student loan world. So I like to do options with that. I like to go long on them. I like to go long on them more than I like to go short on them. Or a short term, I mean. So that's another way. But personally, I've found the most profits to be in the sell side of the call option. So my favorite, hands down strategy is the covered call. And I see you on Twitch there. Let's go ahead and pull up Ford. And we're going to use Ford and what she's trading at as an example. So.
Oh, you want me to look at Ford?
If you could, please.
Okay. Oops, that's not what I want. I did Control F. Lol. There you go, 968.
All right, and go ahead and let's go to some options. Let's go to December at give me the 10 call for December of this year on Ford.
$34.
Okay. Sorry, I'm watching on Twitch, so there's a small delay. Okay, perfect. So let's go ahead and use Ford as an example. So currently, Ford is trading at $9.47. Okay? So in order to sell the covered call, we have to have 100 shares. I don't believe in selling calls naked and just using margin to say that you'll buy the stock in the future. I prefer to do the covered. So in order to sell the covered call, we got to own 100 shares of Ford. So to get 100 shares of Ford right now, market buy is going to be $9.47 a share. So it's going to be $947 is our total cost to purchase. Oh, I'm sorry. I thought that was a 4. So you're right. Okay, so let's go ahead and stick with 467. So 967, I'm sorry. So it costs us $967 total to buy 100 shares of Ford. Okay, cool, great. We now own those equity shares. Those are in our account. Boom, grand, great. We go to the sell side. We don't want to buy the call. We are now going to sell the call, and we are going to put up our 100 shares as collateral. So we are going to enter, and this is just an example that I would use. I'm not currently in this position, but this is one that I would totally do. So I would sell this 10 call, giving us the ability or giving us the obligation to sell Ford at $10 a share if it's above $10 a share at expiration, which on this one is December 21st of this year. So someone wants to buy the right to get 100 shares of Ford at $10. And for that right, they are going to deposit into our account $34 because there is a 34-cent premium in order to purchase this call option. So we will instantly sell this call option. We will collect that 34-cent premium, and our goal is to sell Ford at $10 a share in a year. So we collected the $34 right off the bat. That's profit that we put into our pocket. $34 right off the bat. On top of that, we are going to sell Ford, hopefully, if all works as planned, at $10. And our cost basis is $9.67. So that's
69.
another. Well, but we purchased at $9.67
Oh.
when we started, remember?
Oh.
So our call option, so our cost basis is $9.67. So we're selling it at $10, so that's another 33 cents 100 times, so $33. Add that back onto our premium, we're collecting $67 on our $967 investment. And then there's a secret little side note to that. Ford is also paying a fat dividend. Oh, and we still hold those shares. They're just under contract. They're still in our account. So we're going to collect three Ford dividend payments because of the special dividend. So that's another $15 twice, and then another $5 from the dividend. So that's another $35 plus the 34 from the premium plus the 37. So 67 plus 35, $102 we just made. By clicking that button, we just about locked in $102 guaranteed on our $967 investment. I'm no math genius, but I know that's well over 10%. That's about an 11% gain just by clicking the button, and that's an 11% gain in a 3-month time frame. September, October, November, December. So 4-month time frame locks in 11% gains. And that is my favorite personal strategy.
If it goes up, but if it goes down, you gotta.
If it goes down, we're just going to collect the dividend along the way. So we're still going to collect that $35 before expiration from the dividends. We're going to collect that 34-cent premium. So factor that back down into our cost basis. 34 plus 35, 69. We bought at 467, so we factor that back in. Our new cost basis is now $898.
There you go.
There you go. So now we sell the 9 call. Woo! At the money, you would sell a 9 call. If that's what your new cost basis is, that would get you out of the contract. Go ahead and collect another premium, set your expiration to set you for a few more dividends, and rinse and repeat, as I like to say. And then there's one more big kicker to all of this, Nathan. Not only is that, if that wasn't pretty enough, now, how do you get out? Say you sell these shares, or you sell this contract, and say you want out of it. Ford takes a tumble. That 34-cent premium is now worth $10, 10-cent premium. You can now get out by purchasing that contract again, and that will free up your collateral as if nothing happened, and you will collect the premium. So you would sell the 34-cent premium. Let's say Ford takes a tumble. She goes down a little bit. You buy that same contract back for $10 for 10-cent premium. You pocket the $24 instantly, and then you can go sell another contract, or you can get rid of your shares of Ford. And either way, you're guaranteeing some sort of profit or some sort of gain back just by clicking the button. And with that, it gives you the chance to sell and buy, and that puts time decay in your favor. Because if there's not that violent price movement and you have sideways trading, that time decay will come back in your favor, and that 10 call is now not looking so good by expiration, and it's now worth so much less, you can buy your way out of it. So I prefer to be on the sell side of contracts each and every day, and
the thing is, I don't like about selling the contracts is you gotta sit on them, and I guess it's rewarding if you sit on something like a dividend pair like Ford. But you just I feel like I could utilize my capital better. Me personally, I feel like I can utilize my capital better in buying options and flipping them.
Interesting.
Yeah.
I know. I mean, do you think you can get an 11% return guaranteed? if you're going to put your whole portfolio into some covered calls and you were going to go for something that guaranteed a 7 to 11% guarantee,
If I tried hard enough, I think I could do it.
you think you could?
Not
But
as easily,
guarantee
not
it.
as
It would.
easily as yours, but yours takes time.
It
I
takes
could get
time.
it quicker.
It takes time. Yeah, and you're right. You can definitely compound quicker. You start trading single contracts, then you're trading double contracts. Now you're trading 4 contracts. Now you're trading 7 contracts, and you roll it and roll it and roll it. But I'm just a huge fan of getting the cash flow. I think that's my mindset to it. I love getting the cash flow kicked back to me into my account. Because when I sell that premium and I collect the dividend on what I'm holding, I can just roll that into 100 shares of something else, sell another covered call.
Yeah. I don't know, man. It's a good idea, but it takes dedication, man.
It takes dedication. It also takes discipline to remain in those covered calls, not want to deviate. And
I can barely stay in like weekly covered calls.
mhm.
It's fucking annoying. Get me
And there's
out.
one more strategy I like to kind of go over that I do. I like to. I talked about it before. Right now, I'm in the process of accumulating Chesapeake Energy (CHK), and I will purchase a put option. I purchased the 4 put, and I'm going to accumulate. I plan on accumulating until about the end of September, because by then I should be able to have 100 shares. So I purchased the out of the money put option to protect the downside. So if the stock goes down, my put option will go up in money, and I'm going to purchase the stock at cheaper price. I'm winning and winning. I will roll the money I make from the put option back into the shares of the company. Or my put will expire out of the money because the stock that I'm buying is going up. And that's kind of the way it's been going right now. CHK has been on like a 10% run over the course of the past like 5 days.
Did you know that Chesapeake Energy does not pay a dividend?
I did know that.
Yuck.
I do like I like the space. I like the energy space. They act in correlation with oil and natural gas and stuff in the energy sector as a whole.
Sure.
And they're a pretty big company.
And they're given
But
out for free by Robinhood.
I also like now here going back to the cover call things. Not only do sometimes I won't do a dividend stock per se because on non-dividend paying stocks the premiums are bigger because there tend to be growth stocks or speculative stocks, something like Sprint, Groupon, or even Rite Aid. I did Rite Aid. So you can take a bearish position. You can take a bearish position by selling the covered calls on these speculative assets. And these speculative assets have higher premiums because people with Rite Aid think it's going to get bought out by Amazon and it's going to go to $4 a share. And the other people say it's going to go to the floor, it's going to go bankrupt, and it's going to die. We're going to put it right on top of AOL. And as a result of that, the premiums are higher because of the speculation in it. And higher premiums, it's more profit. So I like to sell at the money on non-dividend paying speculative stocks, and I think CHK is one of them. Because if the price goes down, I will just continue to generate income through selling weekly, monthly, or quarterly call options.
All right, you want to hit us with the numbers, man?
We can. The stock market did close just a few minutes ago. While I got it open, I'm going to go ahead and start with Bitcoin sitting at 6,619, still ticking up where we had a gain during this podcast. Maybe people got out there and were like, yeah, I'm going to be a rebel. Stock market's going up, and I'm going to buy some Bitcoin because of it. Let's see. Dow finished. Up for the day, 133 points. NASDAQ up about 70. SP up about 18. It's a nice, smooth day. Smooth. Strong day. We still having a strong economy. Dollar is still going up. Gold continues to sell off. I'm going to go ahead and get you the gold number if I can.
Oh, yeah, we're doing that.
We decided to talk about it, so let me go ahead and pull up. I'm going to pull up...
Commodities with Jason.
Gold US dollar price. Spot price currently sitting at $1,210. So came back to where she was. She dipped below 12 for a little bit. And that's in price per ounce. That's how we trade it here in America. I like you. I forgot the fund. I don't know if it's gold or GLD that trades and tries to mimic the price of gold. I don't know if that was gold. I'm gonna try to see if I can get the answer for that. But yeah, nice strong week. I'm confident about this week. I did all right. How'd you do this week?
Okay.
You did okay?
Yeah. Let me see.
First, a little sideways. I'm pulling up my numbers right here.
I hate this like Robinhood like crypto shit because it like fucks with like your real week.
Yeah, my past week, I was only up about 1%. Oh well, we'll take it.
Down 4%. I was down more yesterday, so this is not bad. I'll take 4%.
Yeah, it's not bad. All right, well, you want to wrap this bad boy up?
Yeah, we could do that.
All right. What are you watching next week?
I am surprisingly watching Prudential Financial.
Prudential.
Yeah.
Why are you watching Prudential?
Well, I mean, look at their 3 month. Look at their 1 year. Look at their 1 year. Their 1 year is sexy as hell.
You have it up on Twitch?
Yeah. Give it a second because it'll have to get in. Their 52-week high is like the 120s, and it's cooking at like it's cooking at 98 right now.
And are you bearish or bullish on Prudential?
Bullish. Look at that. PE ratio is 5.7. It's like perfect. What is that? Earnings is like $10.
Tell me about this dividend.
The dividend's 2.61. I didn't even realize that. I want the option, dude. I want to go long call options on Prudential.
I like it.
You like that?
I like it.
You weren't expecting
it. Can I get a market cap?
Yeah, of course you can. 41, almost 41 billion, just under 41
Damn.
billion.
I'm about it. It's a blue chipper. She's one of those sleeper stocks. And when I say sleeper stocks, there's a lot of companies that are out there that are great companies and they do great and you would never know.
So this Prudential kind of like it was going up with everybody in the whole market up until January, and then everybody like crashed around this February 8th. That first week of February. Remember?
Yeah, she's down like 30%,
yeah,
40% from her high.
The rest of the market kind of rallied back up, but she didn't.
Maybe she's just getting ready to.
Yeah, that's what I'm saying.
I wonder if they're doing a buyback. A lot of banks are doing that now.
So, people are paying 2% lower right now on Robinhood, so get you some.
Awesome, man.
Yeah, what are you watching?
I am watching. Go ahead and pull it up for me. AMD.
Oh, micro.
Pull up that 1 week. She got upgraded. Somebody, I don't know who. Someone upgraded them and became more bullish on their future. And she's rallied all week.
Oh, damn. I sold the call.
Ooh, nice 21%. I think she's looking ripe for a fucking shorten, Nathan. Someone's going to lock that in. Give it over the weekend. Something's going to happen. Lock it in.
I'd probably strangle her.
Strangle it? Yeah. Let it go. I would straddle it at the money for 3 months. Go.
That's nice. Let's see what those options are. 3 months.
Give me the 3 month straddle at the money. 24. What's that? A 24 call? Give me the 24 call. 24 put.
You want the November?
November.
Total price coming to $515.
Let's do it, baby.
I could do it. Oh, you'd have to 3 months.
I would get out at 620.
3 months?
You won't. I don't think you got the grapes, my man.
The thing is, like, if you're going like a bearish position on this, the calls are super expensive right now. So I wonder if you're like better off doing like a deep in the money call. You know what I mean?
You trying to make it cheaper? I would get an out of the money put at the money call. I go for like the 20 put and the 24 call.
That would cost you $350.
Yeah. Anyway, I think that's a sode, my man.
Figure out how to upload this. If not, it's a Twitch exclusive.
Twitch exclusive cast. Anyway, I had fun. Thanks for tuning in to the 4-part option series. I hope we didn't lose you.
Wow.
I know we're crazy, but
Yeah.
it's a lot, and feel free to ask questions. Talk to us. At us, email us. We would love to help you. If we were wrong on anything, definitely correct us. If you want us to expand on more, or even share us some option stories. Tell us about how you got into it. I'd love to know some of your strategies. So I welcome that. I embrace that. You can also add us. We are now on Twitch, obviously, if you're watching this. We are on SoundCloud. We are on YouTube. We are on Facebook. We are on rebeltradinggroup@gmail.com. That's Rebel Trading Group with 2 G's. And all of those sites are going to be /Rebel Trading Group. So, thanks again for listening. Unfortunately, I'm not going to be back next week. I'm going to do my damnedest to put out a Friday episode. I'm going to be itching for stuff to talk about. And I'm going to go get a nice tan. Go hang out in the islands for a little bit, man.
Shut up and sit
I need it. So,
Well, if without further ado, is it Monday yet?